There's no sugarcoating what happened to silver today. It got pummeled. It got hit hard. But I'm still bullish on where silver's price is going to go by the end of the year. And I think you should too. Word of caution as we explore. There's a lot of different things that can happen between now and the end of the year. I have revised my forecast for silver, and now after hitting my targets in the previous predictions, I still think we might see $41 an ounce by the end of the year. But based off of today's movement in price, it's less likely to happen. I'll get into what's going on with silver's price, but we know it's been a big dip. But if you enter the code Summit Salivate Summer right now through tomorrow on July 31st, you can save $10 off of orders $500 or more of any item until then. So that's the special, and there'll be a link in the description below so you can use that code. And it's going to expire very, very soon. So check out summitmetals.com for that deal. And their selection is great as well. They're improving their selection. Their customer service is awesome and fast shipping. So check them out. So here's what happened with the precious metals today. It was a firestorm, except for rhodium. That's right, rhodium is exploding in price. So we have an explosion and a crushing of the price. Neither of those are clickbait terms for what happened today. There's some, I call them the clickbait conundrums, that think that those terms are inappropriate for the movement of precious metals. But in one day, these are massive moves. This is a big deal. So here's what happened to gold. Gold down 1.62%, not nearly as much. It did not plunge, but it fell pretty sharply today, down $53.80 to $3,273.50. But silver got absolutely hammered. It's down almost 3% right now, down over $1.12 down to $37.11. In fact, the low for today was $36.71. It absolutely got crushed. Platinum is down 6%. It got pummeled hard, down $84 for platinum to $1,320. Palladium fell 3.75%, down $47, and rhodium jumped up 6.3%, up $425 today to $7,775. So it's been a wild day in the markets. Now here's what's happening. Here's why this is occurring. In some ways, not unexpected to some degree. Gold and silver prices being lower as the precious metals are being pressured by a stronger U.S. economic report that fell into the camp of the U.S. monetary policy hawks. And so that's what we're seeing. The U.S. economy expanded at an annualized rate of 3% in the second quarter, recovering sharply from a 0.5% contraction in the first quarter and outpacing forecasts of a 2.4% growth. It was a strong showing, and this is sort of what the trend has been. Good economic news in parts of the economy that have been better than expected, and is boosted by slowdown in imports amid ongoing trade turmoil. The rebound was driven largely by a sharp drop in imports after the first quarter surge tied to tariff-related stockpiling. Consumer spending also rose in the second quarter, though declines in business investment and exports partially offset these gains. Consumer spending measured via personal consumption expenditures was at 1.4%, even with expectations and significantly above the 0.5% mark from the first quarter. This report will make it tougher for the Federal Reserve to lower interest rates anytime soon. I tend to agree, even though the higher interest rates we have, which means it's going to be more expensive for us to service the national debt. And that's a big problem. Of course, the national debt's a problem. Deficit spending is a huge problem. Both of those issues have not really been dealt with seriously and dramatically enough. The big, beautiful bill, well, the jury's still out as to whether it's going to cut costs, and it's going to take a while. A lot of that stuff won't kick in until much later, which is unfortunate. I don't think it should be that way. These cuts should be immediate. Obviously, the package that they passed recently outside of the big beautiful bill. That's going to help some. Tariff revenue is going to be coming in. That is going to help. The rebate checks that they're talking about offering $600 for each of us taxpayers. Well, that is more than what would be needed to bring down the debt. I think it should go right to pay down the debt and cut into that interest payment because we're paying over $1 trillion in interest. It's not good. Traders are awaiting the conclusion. Of course, we did get the conclusion of the FOMC meeting, and the rates will remain unchanged. And again, it's one of those things where I'm kind of mixed feelings about it because really it boils down to cutting interest rates and what the Fed's involvement in it. Why are we so focused on what the Fed does? I think interest rates should be done by the free market itself. The free market should determine those, and not a private institution whose board of governors are appointed by the president and confirmed by the Senate. Nonetheless, Judy Shelton kind of broke news too. She is one of those that have been considered a possible replacement for Jay Powell. She's all for the idea of why not just abolish the Fed, and it may not be a bad idea to do. And maybe that is kind of where things may be headed and in due course, depending on what happens here with Jerome Powell and with the federal board governors and what they do at the next meeting. So we'll see. And the dollar index is also on this news. It's good economic news. And again, not all of it is good. I've heard reports about defaults on mortgages are at the highest level that we've seen. But the dollar index is up. In fact, it is up dramatically today, up over 1% at 99.89. That's huge. So the dollar strength is really pummeling the precious metals sector right now. And so that is I don't think we can blame this totally on suppression, although because silver has fallen more than gold, one can make that argument, but usually this is what happens. Silver typically falls faster than gold during these times, and we're seeing that here. Now, as we continue to weigh what's going on here, let's talk a little bit about what the technicals are saying. The gold future bulls have the overall near-term advantage, but they've faded. Bulls' next upside price objective is to produce a close above solid resistance of the July high of 35.09. And of course, I don't think it actually got there in the spot price, but nonetheless, it's a futures market. Next term downside is $3,300. Of course, it fell below that. Silver is now looking at technical resistance at $40. The next downside price objective for the bears is the closing prices below solid support at $36. And we got into the 36 range today. $40 is highly unlikely to happen by the end of this week. And I had, for the first time since polling it from my viewers, thought it was going to get there this week. But nonetheless, I spoke too soon. And it doesn't look like we're going to see it by the end of this week or the end of the month. And it kind of would have been nice, but that's okay. I'm still bullish on silver. I think you should be too, with caution. In other words, we never know what the markets are going to do. Weigh your decisions based off of what your understanding of the market is and how things can change ever so quickly and ever so rapidly because of what market conditions and what numbers come out, and geopolitics and the like. And they can move pretty dramatically. And so then we should also consider when the markets dip like this for a purchase, because dips are always a good time to buy and to help your dollar cost average. That's for sure. Now, I still think by the end of the year we'll see $41. I think there's more that is bullish for silver than not. As we adjust to this, I think there's going to be a consolidation period through these metals moving to the downside. I think they'll normalize. And remember, we have August 1st just around the corner. That's when the tariffs will kick in. We also have some of the contracts, at lease rates, and stuff that are going to come due as well too. That could be bullish for silver because this may not be enough to help them cover those short positions as we're still above $37 an ounce. And $37 silver is still pretty darn good. In fact, I even go back to $34 being pretty good for silver. But the gold to silver ratio, though, indeed has widened. It is sitting at 88.53 now, still below 90, but still very, very high. And I would still love to see that in the 70s range. And I think we'll probably get there at some point in time, if not this year, maybe early next year. But overall, I'm feeling pretty good about silver, and these price fluctuations and moves, well, they're to be expected, especially with some of these data come out. But once some of this is digested, and also remember, some of these data also get revised, especially the unemployment numbers, they get revised one way or another during the next month, and that's barely reported on. But it's nice to see a stronger GDP than expected, 3%, that's good. And who knows what's going to happen from here on out. But let me know what your thoughts are about silver getting hit hard today. Hold your feet. Hold your feet to the fire and refine ourselves through the fire as we navigate these markets. And with that being said, I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.